Hey everyone, we're back with a market update for February. We've got the numbers for last month, and it was not the January that many people were expecting, including us. So let's take a look at the monthly trends, and then we'll zoom out and have a look at what's happened over the past year.
Yes, so like you said, not the January that people were expecting. When you look at the number of new listings, it's up 72.7% from December, which you would look at that. If you just look at that number, which is what some media outlets might do, they would say new listings are, astronomically high, but it's really not, because in December we only had 1,178 new listings total.
Listings had been on a slide for a while.
They had been declining, after being very steady, overall inventory, very steady all summer. Right before Thanksgiving, it started to fall. And in December, and particularly the week around Christmas, there were the lowest number of new listings that I've ever seen. It was like 138 new listings, and 1,178 in 1 month is just astronomically low, because typically, just for reference, over the past couple of years, we've been seeing about 500-ish every week. So 1,178 for a whole month, very low. And see, here's January, right about 500 a week, and that's a 72.7% increase over December.
And those listings were getting snapped up too. They weren't just hanging around.
And that is evidenced here when you look at pending sales in December. Pending sales in December outpaced new listings by a little bit. And then in January, pending sales are up 25.5%. And again, that's a little bit below the number of new listings in January, but these are getting snapped up very quickly. That's what is that? 18. That's like a couple hundred units left over from new listings in January. And those are getting snapped up from what I can see.
Just anecdotally, the last listing we put on the market was, I think it was last week, it went into escrow, and it was on the market 5 days, and we had 10 offers?
10 offers.
It's an escrow over asking price.
Yeah, significnically over. So I mean,
and that was not the case with listings that we were putting on the market, last year, summer.
No, not
fall.
not even in November. As we put one on towards the end, early to mid-December, and that one went pretty fast. But yeah, the January thing, buyers really woke up in January. So closed sales.
And we'll talk about why that is in a minute.
Yes. Closed sales in December, 1,566, and then less closed sales in January. But that's because these are the pending sales from the month before.
That's a lagging indicator. So that's telling us what was pending, the month before.
Right. So month over month, down 14%. And then, of course, again, the number of homes for sale is down 10.1%. And this number here, number of homes for sale, has been going down every single week since November 9th, I believe. That's been going.
You're doing weekly reports too. So if you want more of a micro look, check out our channel for the weeklies.
Right, and like earlier this week, the first time I looked at it, early this week, it was 2580. Then yesterday it was 2540. Today 2527. So it's going down every single day. And heading into a weekend, you would expect it to go up, because typically people list homes Wednesday, Thursday. And then, they show Friday, Saturday, Sunday, look at offers Monday. That's been the typical pattern, which was broken, of course, in May and June of last year. That pattern was shattered, but it's coming back again.
Maybe not this weekend. We've got Super Bowl. People are going to be busy eating chips and hanging out with their friends.
Yeah, don't call me this weekend.
At least not on Sunday.
Not on Sunday after 3.
Right.
Eating chips and watching the Super Bowl. All right, so median price up just a tiny bit from December, which we expected given the experience that we had personally and talking to other people and just watching the numbers. I was expecting to see a minor increase, and we did get that minor bump of 0.3%. So that is what's happening, month over month here. And
let's zoom out and look at the yearly trends.
Yes, we'll zoom out and look at yearly trends now. Yes, looking at the yearly trends. So 2021, 22, and 23. And it's hard to believe that this has happened, but we look at this every month, this 3-year chart, and all the way through 21 and 22, we had 2020 in there to sort of.
I like to look at that long chart on the bottom there. That really kind of tells the story going back to 2012.
Yeah, for sure. Yeah, if you look at historical new listings by month, it's a very, very much the same over and over again. And this dip here, I would imagine, is December every year, and then starting right about here in 2019, this peak is no longer being achieved. We're now finding this 3,000 to be the sort of the newer normal, and then here we are.
That's a big dip there.
Yeah, this is just this is as low as it's been.
So we're heading into the seasonal bounce, and I guess we'll see how high that line goes.
Right, but historically it has been all the way up here. So anyway, looking at this year, 23 new listings, 1,292 detached, 742 attached, which is down from last year, of course, and down from the year before that. And year to date, same thing, down from the year before and down from the year before that. So the trend that is developing is people aren't putting their homes on the market. That's sort of the trend here. Less homes on the market, less overall sales, less pending sales, less activity overall with less new listings, and that means less realtors too. So I mean,
we've seen this before.
Yes, we have seen this before, but it wasn't because there weren't any new listings.
No, it's a different set of circumstances.
Right.
Back in 2007,
yes.
2008.
I guess the point is, when the market shifts for whatever reason, experienced realtors will be there, and ones that may not be as established may not be there. Anyway, looking at pending sales, January of 21, 22, 23, again, the trend is down, and the reason for the downward trend, of course, is because there are less listings. And again, that if you look at this long chart, as Deva mentioned earlier, you can see that new sort of trend starting to develop here around 2020. Yes, it starts going down as listings go down, and same thing year to date. So then we are going to look at closed sales, which again, as we mentioned, a lagging indicator. So yes, closed sales are off 36% from last year in detached homes. However, again, with less listings and this being a lagging indicator, I would expect next month to be far more robust in terms of closed sales.
Well, just looking at the pendings, we would certainly expect that, unless a large percentage of those fall out of escrow, which
right
isn't usually the case.
Yeah, what you're expecting is these 1,200 or so, and these 700 or 600 or so here. So you got 1,800 roughly homes here that should wind up being closed next month. Not all 1,800 will close, but
most of them usually do.
A vast majority should. So that's what's happening with new listings, pending, and closed sales. And then looking at median sale price, that is very, very even, as we mentioned. Overall, between attached and detached, we have a 0.3% increase from December. So looking at last January, this is where we started, right here at 880, I believe is what that says, and then 849 this January. So 2022 and 2023 are basically starting in the same spot. And if you recall, of course, in 2022, last year, the median price for a detached home got all the way up to $1 million 1 month.
1 million even.
$1 million.
And that's going to be up there on look at the long chart. You can see where that was the $1 million month.
That's where your $1 million median price month was. So basically what this means is everything that we gained in 2022 came off.
We are right back to where we were at this time last year.
Just back to square one, in other words. So again, Attached properties, same story, very, very even. And year to date, because we've only got 1 month to look at, exactly the same as month over or year over year here. So median price is back where it started in 2022, and we will see where it winds up going. And what is the primary driver for demand?
Interest rates.
Right, interest rates. All right, so interest rates are up just a tiny bit from last week on average at 6.12. If you recall, I think the highest point that we saw for an average week last year was about 7.09. Or
if you mouse over that blue line there, you can hear.
Here we go. Yeah,
7.08.
7.08. Yeah, that was rough. The interesting thing that's happened though is the buyers that were in the market here when the interest rates were at 7.08, they went from, well, let's see, if you go all the way back here, they went from the let's go all the way back to March of last year, when they were at 3.9 on average. So the buyers that were in the market when they peaked out here, we're still remembering, this stuff back here. So they're looking at rates going, oh my gosh, that's crazy. Buyers that are in the market here entered the market, when rates were possibly a lot higher back here. So to today's buyer, this rate is not so crazy as it is to last year's buyer. So that's helping. And also just the fact that rates are down is helping. And the fact that there are very few homes on the market is all combining to create what's happening now, which is median price stabilizing at least for now, and possibly rising, after we see what happens this month. So yeah, that's essentially what is happening.
All right, that's it for today.
Yeah, I guess so.
Okay, well, thank you for joining us. We'll continue to keep an eye on things, and we'll be back next month with another update.